Alright, hello everybody. So I'm just going to get started real quick. So the first thing I want to look at is SPY S&P 500. So I'm just going to zoom out for you guys. Now I know some of you guys don't really follow me, so maybe this is your first time here. So one thing I do want to notice is on SPY, there is a trend channel that we're working off of. This is the primary pattern that we're going off of. And one thing I want to note is when we go on a shorter time frame, so we're looking at this 1 month time frame right here, and I zoom in, there's a little gap right here. So we do see a gap right around 406.74, which we were at before. And then to actually close this gap, we need to come all the way up here to around, let's see, let's just zoom in a little bit more. It's looking like around 409 or like 410-ish. So 409, 410, that's when we close this gap right here. But also notice that when I zoom out, if we go ahead and close this gap right here, we end up on this trend channel. So this does look very risky. So the one thing that I really want to note here is that if we do gap up and we close this gap right here, there's a very big chance that we start falling. So if you do take a short position, this is not financial advice, but if you do take a short position, the risk reward is pretty good right here. But obviously, if we do close above this, you would want to get out ASAP. So if you ever do take a short position, or if you ever do get puts, you really need to learn to take your losses quickly when the trade goes against you. And the trade will go against you when we close above this. So here in the next few days, if we do come up and close this gap, then I do think that things get a lot more bearish. But if we do close above this gap, then the potential is pretty high. We could be drawing out a inverse head and shoulders here. So if I just look right here, this could be the left shoulder, this could be the head, this could be the right shoulder, and then we could essentially fill this entire shoulder right up here to 429.76. So this is also a major area of resistance right here. So this is what it's looking like. It's looking like we either reject right here, or we just have this massive rally that could take us all the way to 430. But there are also areas of resistance here at around 418, 420. So there is a lot of resistance and not as much support. So if we do break under, let me just zoom out here. So I know my chart looks a little bit complicated, so I'm just going to take a few of these lines out. So if we do break under this 392 area, then things really start getting hairy, especially if we break under this prior support that we made at 385. Then there really isn't any support until all the way down here at 350. So things start getting really bad. And now you do notice that my chart is a little bit crazy. So I draw all these wedges all the time. And if I zoom in, just kind of show you some of these wedges that I draw. This right here is a rising wedge, if you don't know. And then essentially when you see a rising wedge and you see it break a pattern, you start seeing this price action go sideways for a bit before it decides to make another pattern, whether it's to the down or upside. So a rising wedge isn't always bearish, but it could be highly bearish if you note right here, and also right here as well. So the other things that you do want to look at is this volume profile. So when we do start melting up, you tend to see melt ups on very low volume, and when selling does come back, you start seeing volume pick up a little bit. And you do kind of see that this is kind of like a parabola. So it does almost the inverse of what you see up here. So this is like an inverse parabola. This right here is a parabola. So that's kind of like the volume profiles that you need to pay attention to sometimes. So I do want to point out XLF. So I was talking about XLF the other day and how there is a lot of potential here for a breakout. And we're clearly seeing that today. I think this is the biggest reason why SPY is rallying, is because the financials are rallying. So let's just take a look at JP Morgan, because JP Morgan is one of the biggest holdings in this ETF. So if we do look at JP Morgan, nothing significant here. We're still in this broader downtrend. But if we do break out of this falling wedge, then we could see a pretty significant rally. But if I'm drawing this wedge out, we could still fall quite a bit. And we do have this gap on JP Morgan all the way at 106. So this gap could get filled. And I do think once this gap does get filled, we could see a pretty significant rally on JP Morgan. But as of now, I'm still a little bit cautious. We could just reject right here, right around 123. So definitely look out for that. And let's take a look at QQQ. So I'm just going to go on a lower time frame here. Now, same thing is happening here. We do have a gap on QQQ. It's right at around 308. So pay attention to that. We could just get a gap fill, and then we could fade. So the trend here isn't as clear on QQQ. We do have this little breakout. So this is kind of what makes it a little bit more complicated, because if we are looking at this little trend channel right here, we did break out, but I could just move this right out here like that, and then we're basically at the end of this trend channel. So if we do reach the end of this trend channel, then yeah, I mean, it's looking risky at 308. So 308 on QQQ and 409 to 410 on SPY is when we could start seeing gap fills and possible rejections. So if we do see a strong rejection off those areas, it basically means that shorts were just waiting to pick up another short. So definitely gets a little risky right there. Now I want to look at UVXY. So the other day I was pointing out that it was very fishy, that volatility was fading, and that SPY was fading as well. But today it's becoming very clear that that was essentially just a trap. And I think people were just kind of accumulating throughout that day to see a possible rally today. And now we see that UVXY is at a pivotal area right here. So if we do close under 14, let's see, this is right around 1448. Let's just zoom in a little more here right now. Sometimes it's really hard to tell with these tiny little cent differences. So it's like around 1445 to 1452. So if we do close where we are now, we're closing under the support level, and I think that's pretty bullish for us, because if you zoom out, you can see that this was prior resistance right here. It was resistance right around here and here, and it's also support for this massive candle right here. So if we do close below that, then I do think we have a chance to see UVXY at around $12. So I do think below this area is where you should start accumulating some UVXY. And just again, this isn't financial advice, but if things do get hairy in the future, which I do think they will, then you'll have some sort of hedge. Now I have this belief that at the start of the month, we get all of this economic data. So we're a lot more likely to see a heck of a lot more volatility, because we get things like CPI, PPI, and all of this economic data. So I do think that the first half of the month is generally going to be a little bit more bearish, and the latter half of the month is generally going to be a little bit more bullish. And that's if we don't have earnings. So April was essentially horrible because we had a lot of we had a lot of economic data at the start of the month. And then we had basically mega cap earnings, which weren't as great. So that's essentially the reason why we sold off all month April, and then we even dragged that into May with the CPI readings. So we could catch a break here at the end of May, and we could just go right back to fading in the beginning of June. So do keep that in mind. Generally, your CPI is going to be around the middle of the month. So let me just take a look at the chat here, see if you guys are saying anything. So if you guys do want a ticker request, just go ahead and let me know. And keep in mind that my audio is about 5 seconds delayed. So, if I do say, hey, do you guys have any ticker requests, and I don't see anything, then I will end up ending the chat, and you might hear that like 5 seconds later. So go ahead and let me know ticker requests, and if not, then I'll sign off here. And I'll just give you guys a few seconds. All right, so I see a ticker request for net. Let's go ahead and do that. Cloudflare. Ooh, boy. So the one thing I do want to notice is that there is a very dominant pattern. It's essentially a head and shoulders. So we see this shoulder, and it's a double layered shoulder. So shoulder, shoulder, head, and then shoulder, and then we could just be building out another shoulder here. So right now, I would say that this looks highly bearish. There is a gap right here, as you can see. So there may be a point in time where we simply just go right up here and we fill this gap right around 74.81, and then we fade back off. So do keep in mind that if we do get bullish and you're not seeing any crazy news come out of net, then this could just be a gap and go. So a gap and then flush. Now there is support. Let's see. Support right around here, but it seems like we're kind of breaking that or messing with it. So if we could get back above this support, that does look a little bit better. But if not, I do think we're going to, let's see, close this gap right around here at around 46.32. And let me see if there's any sort of trend here. See, I do see this trend right here. So there is this downtrend that it's been following. So every single time it's bounced off here, you kind of see a bit of a rally. So maybe we could see that potentially. But just given this earnings gap down, I think the potential for this to happen is a lot less likely just because it happened after earnings. So they're going to digest this move right here and then kind of decide from the next earnings. Let's see. We have AMD, so I'm going to check that out. All right, actually, before I go on this one, let's just look at the weekly time frame. Yeah, so it's below all the moving averages on the weekly time frame as well. So AMD is next. So with AMD, I will point out a longer term trend line. So I think one of the biggest reasons why we're bouncing on AMD is just because we hit this pretty big support line right here, as you can see. So I'm going to look for some resistance here. All right, so if I am looking for resistance, it's going to be right here on the I think it's going to be right here on the 50-day moving average on the weekly time frame. So that's going to be 112 right here. And as you can see, I got this downtrend channel or downtrend line. Well, I guess it could be a channel. So yeah, we do have this channel that we're working off of. It's a downtrend channel, so it's not looking too good. And we could essentially just hit this area and reject. But if I am looking at the yearly time frame, we are slightly getting above the 50 days. So this is looking a little bit more bullish. There really aren't that many stocks in the market right now that are above their 50-day moving average. So I do think that the strength on AMD is definitely looking a lot better than everything else in the market. But you do have to be careful. If we do close underneath this, then it could just reject, and we could make another leg lower. So that is something that I would be cautious of. If we do break below this support trend line, then I think the next area is pretty clear. And I think we'll just go right down to this area right here at around 72.50. Now I will note that there is this gap right here, and I don't think it's ever been filled. So this gap right here, the bottom of this gap, is right around 69.68. So do keep that in mind. Let's see, any other stocks? All right, so Amazon. My thoughts on Amazon. So honestly, if I remember correctly, Amazon, they announced buybacks, but I didn't think that the buybacks were all that amazing. So if we do see a stock split, generally stock splits create like a lot of hype, so you will see like a momentary rally, but I wouldn't just be buying just off a stock split. So Amazon has definitely been beaten up pretty bad. And you have to remember that, their earnings were so strong during COVID that now that we're normalizing, it could just essentially revert back to these pre-pandemic levels. So if I do zoom out, and we're looking at 2018, we're essentially at 2018 levels. So we're at the 2018 high. So I don't think this is a bad area to be buying Amazon. You're probably getting quite a discount. And I will note that there is this support trend line on Amazon that's acted as support in major sell-offs in the past. So here in 2018, we sold off almost, gosh, that was quite a bit. So it sold off about $700 here. And then we got caught on this trend line. Here in 2020, when we had that crash, we sold off about $600. So now we're essentially, well, we basically fell under that, as you can see, and we closed this gap right here. So we essentially faded this entire 2020 move of the COVID pandemic. So right here, as you can see, we bounced off from this area where we rallied. And we actually fell below, and then where this candle closed is pretty much at this trend line right here. So if you see the body of this candle, it basically closed right at the trend line. I could just have this drawn incorrectly. So if I do adjust it slightly, it does end up a little bit better. So yeah, as you can see. But if I was going to buy Amazon right here, I wouldn't go all in. I would just really just peck at it very slightly, because we don't know what the next earnings are going to look like. So definitely be cautious on that. And right now the overall trend doesn't look too good. I feel like this entire move could just be faded all the way back down to 1.6 potentially if we do see capitulation. So it's kind of my more bearish case right there. So if you are going to buy Amazon, just be wary and be ready to average down all the way to levels as low as 1,600. Now let me just check the chat again, see if there's anything else going on. Ooh, Tesla puts. Tesla's really risky. I mean, I don't ever mess with those puts. I'm not made of money here, but I will tell you where I do think that the risk levels get a lot more risky. So as you can see right now, we basically broke out of this wedge. So right now might not be the best time to be getting puts on Tesla. Maybe it is, but just given off this trend right here, I would be a little bit cautious. So we could potentially have this downtrend channel in the works, and maybe we could reject right off here at around 811. Now notice that 811 is also this area where we built in this candle, this more indecisive candle, and it's also this area of prior support. So it's right around like 811, 820-ish. So that could act as potential resistance, but I wouldn't be putting all my money on that. And if we do look, if we do zoom out, this is actually the start of this massive rally right here. So this could act as pretty good resistance, this 820 area. And let me introduce the moving averages here. So yeah, on the moving averages, we're below all moving averages. So it is in a bear market, or a bear trend, full bear trend. Now, let's take a look at the yearly time frame. So we're managing to stay above the 100-day moving average. So yeah, as of now, I would say it's a bit hard to say from here, just because we're just starting to break out of this wedge. So if we do reject off this area, I think it becomes a little bit more clear that we're just going to make another leg down. So that's definitely the one thing that I do notice in Tesla. And if we ever do break underneath this trend line right here, this support trend line, I think, writing puts would be a pretty good move all the way down to, potentially like 615 here. So if we do break under this area right here, so right around 702, then you could write puts down to this potential support line, or even further. But I think right now it's a little bit more risky. And puts on SPY, I don't know if you're here for this, but let me just go over it real quick again. So it's actually not too far away. So I'm going to go back on this 1 month time frame. There's a gap right here at around 409.41. So if we do hit this gap, we're also going to hit the top of this trend channel. So when we fill that gap, we're going to hit the top of this trend channel, and it looks very risky. So that's where you're probably going to want to grab some puts, but you're going to want to be very agile, and you're going to want to be there. So you want to make sure that you're at your desktop or at a location where you could quickly cycle out of this if this goes against you. So if we start breaking above this trend channel and this trend, this resistance line, then yeah, we're going to break out, and we could break out potentially all the way to 430, or right here at the 50-day moving average, which happens to be right at around 431.58. So do watch out for that, and let me know if you guys have any more ticker requests, and if not, then I'll go ahead and sign out. All right, so that seems like everything. Now, for those of you guys who are new to my channel, make sure you check out the rest of my content. I got a lot of content just talking about what to initially look for when you're looking for a stock. So things like PE, earnings per share, and just historical PE, things of that nature. And I do have a whole course on technical analysis. It's very introductory, but as you keep watching my videos, you might be able to pick up some of this stuff. So have a great day, and